My name is Kris Allen, represent First Bank. First Bank is one of the few family-owned banks in the United States, one of the largest as well. We've been around for over 100 years, fourth generation in banking. My background goes back to 2005 is when I started in banking. I started as a banker, got promoted, assistant manager. Now I'm an area manager, which I cover 14 branches in the greater LA and Inland Empire area. So I'm responsible for those banks' performances as well as the management of those locations. So thank you.
And I'm happy to kind of give my background as well. My name is Keith Spears. I am more on the equity side. I'm with a firm called Include Ventures. We are basically an asset management firm that's focused on women, people of color. We're raising $250 million to invest in venture capital funds and then invest in founders. And we have a particular focus on climate, financial access, health and wellness, education, and media. And so from our perspective, we're looking for super talented entrepreneurs. We're trying to generate great returns in terms of what we're doing. And we're looking for diversity, both at the fund level and then at the company level. And then finally, we're looking for deep impact in underserved communities, right? So that's what we're all about. My personal background is, 30 plus years of doing investment banking at Credit Suisse, Goldman Sachs, firm called Hamilton Lane, where we invested $500 million throughout the state of California. So we invested to create jobs, that type of thing. We invested in about 230 companies that did about 104 billion in sales and employed 120,000 people. And so what we're trying to do with Include Ventures is essentially replicate that, have impact at scale, not only here domestically, but internationally as well. So with that, I'll stop and maybe Kris, I'll ask you a question, which is, as you're kind of looking to invest, make loans to companies, what are some of the challenges that you see some of the companies that you work with have as they're trying to access capital from you?
All right. Well, one of the biggest issues we see is not enough profit. A lot of times there's a lot of items that they're writing off on their taxes, which is great for tax breaks. But when it comes to lending, we have to show a profit, and it needs to be a sizable profit, and it needs to show trending upwards. So when banks look at your financials, we ask for 2 to 3 years. And one of the things that we're looking for is each year, is the business increasing, decreasing, or is it flat? You don't want to be on the decreasing. Obviously, 2020, everyone took a decrease, so that's understandable. People got PPP, so it kind of made up for that. But we're looking for profitable businesses and businesses that are trending upwards. A lot of times when people are applying for credit, they're applying after the fact. Banks are looking for business owners that can plan ahead and see the future. If you're a seasonal business, you need to be able to know what next year is going to look like. When's your slow time? When's your heavy time? It's always good to apply for lending during the times where you have plenty of business. We don't like to see you applying when it's the slow season, just because your financials don't look as well. And that's a little worrisome for banks. So I would say my piece of advice would be to apply during your heavy season when your accounts receivables are high, and we can use that as a form of collateral. But if your collateral is low, the bank doesn't have much to help lend for what your needs are, whether it's a line of credit or some sort of term loan.
And I would just add to that, more from the equity side of things in terms of what we're looking for and some of the challenges that we see. We're first and foremost looking for tremendous business plans and tremendous management teams who have expertise and capabilities within, their area that they're kind of trying to raise capital for. And I think what we also look for is skin in the game, right? So if we're going to be investing capital, we want to make sure that the entrepreneur has capital committed. And I think one of the big challenges that we see is just a lack of access to capital, right? Which is the whole panel that we're having this conversation about, is that a lot of folks in other communities have friends and family and other resources that they can draw upon to kind of get the idea up and running, right? And so I think that's one of the things. Okay.
You're muted yourself.
Can you guys hear me now? I apologize.
Yeah.
So one of the things that we would recommend is, strategic partnerships, relationships that can help bridge that gap, provide some of that capital, whether it's a strategic partner in a certain sector or customer relationship that sees the value of what you're doing, can kind of help provide some of that capital, as well as, resources that you can hopefully bring to the table. So that's something that, we see that that we look for. And then the other thing that we're looking for is, in addition to great management, is, great technology, great ideas, great things that are defensible, right? Whether it's a patent or a way of doing business that separates you from the competition. So those are kind of things that we're looking for. And I think, so as you, I'm not sure why that keeps happening, but as you're building your business, I would encourage you to think about that from kind of an investor's point of view, right? What do you want to see if you were to invest in a company? And those are the things that we want to see as as we're thinking about making a commitment to a company. So I guess another question that I have just in general for you, Kris, is as you kind of look into the future, you see what's happening from interest rates going up. How does that impact your business? How does it, the potential for a recession kind of impact how you underwrite and how you think about which companies to provide debt capital to?
Good question. Yes, from the looks of it, we are probably going to head into a recession. Far as this year, it was kind of yin and yang. On the consumer side, it definitely affected a lot of the mortgage rates and people buying. Years prior, people were paying above mortgage prices, where on the commercial side, at least on commercial lending, things were steady, at least as of now. Things were steady. Things didn't change too much. Rates have stabled off a little bit. They have gone down a little bit as far as commercial lending is concerned. Banks are conservative lenders, so we once again, we want to see trends upwards. As of now, we have not made any decisions to tighten our belts as far as lending. We're actually banks in general, especially our bank, we're in a good lending position. The pandemic actually did banks very well, so there's a lot of deposits with banks, and so we're looking to lend. We're looking to lend to the right clients, to the right industries. Obviously, there are risky industries that most banks don't lend to. We want you to be in business at least 2 years so that we can see tax returns. If you're an upstart, lending may not be the best for banks, or your option wouldn't be best coming into a bank if you're an upstart. We would recommend maybe starting off with the credit card or trying a different avenue of borrowing. But as far as industries, food services is risky for us. We don't like that. Trying to think what else. Hotel businesses, dry cleaners. There's a few other ones, but for the most part, we're open for business right now. We're not scaling back, at least at this time. We're waiting to see what's going to happen as far as the community, as far as the recession is concerned. Any hard decision hasn't been made yet.
And I think from an equity perspective, we are super cautious in this time, right? Because we're always looking forward to seeing what the opportunity set could be. With that said, there are a lot of companies that started during economic downturns, during times like this. And so, we want to recognize those opportunities and look to invest in them for sure. But I think one of the things that we look for, you mentioned the 2 years of history. One of the things that we look for is an ability to understand cycles, right? So, to the extent you're an old guy like myself, you've seen a number of different cycles. And so that's important from our perspective, right? We want to understand a company and a management team's ability to manage those cycles, to kind of go through those ups and downs, take advantage as they see opportunities present themselves and that type of thing. So that's kind of what's, from our perspective, something to kind of think about. And then also there are certain sectors that are going to do better than others during these types of periods of times, right? So as we're looking at, things around education and workforce development, things that help people transition from, old economy to new economy jobs, that's going to be something that we're going to be very interested in. As we look at health disparities in our communities, clearly things that help, as we get through a pandemic and, other things that could come on the horizon, opportunities in those spaces are going to be of interest to us. And I think we're always going to be focused on opportunities that are going to create jobs and as opposed to like AI, artificial intelligence or machine learning that are kind of taking jobs away. So that's going to be another kind of thing that we're going to be focused on. So I will stop there. And then I would like to see if Frank, I know you were, if you had any questions or if you wanted us to kind of address any topics as well.
Yeah, thank you. I'm sorry, I was playing the Zoom matrix, and I think there were 3 different out there, and I was trying to zoom. I said, wait, I don't think I'm on the right Zoom call. So I appreciate all of you, and thank you so much. There's several questions as we start looking at, really around access to capital. And, and Kris, I think you brought a little sense of that right now when you're talking about that. And that is, what do you think about the future for Black business owners? Here at our institution, we think this, the thing is very bright, especially when we start looking at, special purpose credit programs that are exploding in the market, and everybody's trying to move beyond fairness and what we call equality and really looking at equity stake, really driving that and being intentional about helping African-American business owners. I would love to hear your perspective on where you see, is there any opportunity for Black businesses when you look at access to capital, or anything that, and also anything that you're hearing in the marketplace that's been exciting for you in the last 6 to 12 months around opportunities?
Yeah, as far as opportunities, I haven't heard anything specifically for African American, but what I have noticed in my experience and in my career is a lot of times people of color, not just African American, but people of color, they don't have the proper education to know the finance side. It wasn't necessarily taught either in a household or when they were developing their business. So just being on calls like this, understanding what banks and lenders are looking for is a big deal. And yes, there are special opportunities, special grants out there for African American and female business owners. The banks, of course, when it comes to SBA lending, we follow those guidelines as far as SBA lending, if that's the route that African American business owners want to go. But I would just encourage you to continue to be on calls like this, educate yourself on access to capital, what banks and lenders are looking for as far as how to lend, when to lend. Once again, waiting when you actually need the cash is always the worst time to ask for a loan. And a lot of times people in general just don't understand that. And it's usually an emotional decision, and they get flustered and they get upset. A lot of times when you go to a bank, just a little insight on how we think and see things. We have to act in a fair capacity. So we can't necessarily give one group of people insight while we don't for another group. If you're going in for a loan and you're declined, I would ask for the specific reasons. A lot of times they'll say a letter is going to be sent and it's going to tell you why you were declined. That letter, it doesn't necessarily give you the details. And a lot of times it doesn't really help you. And I would say create a relationship with your local banker, your local bank manager. That way, come to them first and let them know what you're thinking about doing before you do it. Just because once you submit that application, it is what it is. If the application isn't filled out properly, which a lot of times it's not, it will be declined. And once it's declined, there's not much that banks can do to help you unless, once again, you have that type of relationship with your banking officer. So I would encourage you to have a relationship, let them know what your thoughts are, what your future is, what you're looking to do. And from there, they will kind of walk you down the guidelines of what's needed for that loan, what the banks are looking for. They might even look at your financials and just kind of give you an overview and say, based on what I'm seeing, it's a good chance that you could do this or that, versus once again, you applying blindly, getting declined. Once you decline, there's not much they can do or say legally, just because banks are very heavily regulated. And once again, there's a certain dialogue that we have to have once an application is taken. So I would say have that relationship beforehand. But I mean, in general, Black people, the economy, it's looking bright. It's just knowing the education, knowing what banks are looking for to get that capital.
Hey, no, go ahead, Frank. My apologies.
Okay. No, I was going to turn it over to Keith, and then I have a couple of questions, and that came up through the chat here. So going to make sure I get to those. Keith, do you have
I think historically access to capital has been limited for folks that look like us, and that's just the reality. And in particular on the equity side in the venture capital space where I am, it's been abysmal. So, you know, it's like $70 trillion of capital out there, and only like 1.4% goes to people of color and women, which is ridiculous, right? And so what we have seen over the last year, you know, since the George Floyd situation, is that there has been a lot of talk about increasing capital to communities of color, underserved communities, that type of thing. A lot of banks, corporations, and the like. And I do see an uptick in interest and, you know, commitments from different institutions around African-American business owners in particular, which I think is fantastic. It'll be to be determined how sustained that is and how, you know, that is over time, and whether or not this is just a blip. But I would encourage folks to, you know, to look out for those types of opportunities, whether grants, loans, equity, whatever, and, you know, cast a wide net, put in applications and see what might be possible in terms of getting access to some of that capital. I know for us, you know, we're, as I mentioned before, we're raising money to basically to do exactly that, to invest in funds, venture capital funds, as well as invest in companies. And so we're going to do whatever we can to demonstrate that you can generate great returns by investing with super talented folks like us on this call. And if we can do that successfully, hopefully we can change the game a little bit and attract more capital to our communities.
And if I may, real quick, this is Will Jackson from U.S. Bank. My apologies for jumping on late. Frank, how you doing, sir?
I'm great, brother. How are you?
I'm doing excellent. So one of the things I wanted to talk about, Kris brought up the education piece, and my focus is Black business and women entrepreneurship. And so we have a community plan, and our community plan spans 5 years. And a part of that community plan is Access Business, where I sit. And so part of what my plan is to educate, to make sure all our I's are dotted, all our T's are crossed. Because of course the goal, everyone wants capital. That's the ultimate goal. But in what I've been out there and what I've seen, we're not ready. From a documentation perspective, we don't really understand finances. We don't understand our financials. We don't even understand our why. So my job is to sit down with these businesses and give them the business 101, A through Z. So they're equipped. So when it comes down to accessing this capital, we're ready. there's no reason why they're not being, these loans and this access to traditional banking products aren't being approved. And if they aren't being approved, when all our I's are dotted and all our T's are crossed, they have an advocate in me to hold the organization accountable. Because see, one of the things Kris, Keith, I heard you mention George Floyd. Ever since George Floyd, a lot of these organizations have realized, hey, we're not doing enough. We're checking the box, right? And financial institutions as a whole have benefited handsomely off our backs. And so what we're doing is really being intentional and deliberate about closing this racial wealth gap by providing these tools, the resources, and strategies they need, not just to be economically sustainable, but successful. That's what we're doing. And so, but it goes back to what Kris mentioned, the education piece. We have to make sure that we are buttoned up and tightened up in terms of accessing this capital. Now, the unique thing about my role is, in the event US Bank can't do it, we have relationships with our CDFI partners, which are community development financial institutions. The goal ultimately, because they can get under the hood, hold hands a little bit more than we can from a technical assistance perspective, but ultimately get them the capital they need while we provide that roadmap for them accessing traditional banking products. Again, we have a $100 billion community plan. 60 billion of that money stays here in Northern California. All kind of lending commitments just from the retail side, mortgage, commercial. There's a lot to be flushed out in this, but we're really, really on the front line of being really intentional, deliberate about really disrupting this landscape to make sure that we have a seat at the table and we have what we need.
Yeah. Hey, thanks, Will. It's probably, if you don't know, Will's institution, US Bank, purchased my institution, Union Bank. So we'll be cousins real quick, Will.
Indeed.
Let you know about that. And so, that they did announce what is called the Community Benefits Plan. It's a $100 billion plan, 60% of which has to be state of California. And that's 20 billion per year for the next 5 years. And a lot of that is driven around, racial justice, social justice, but it really is, when you start to peel the layer and look at it, and I encourage everybody to look at it, it's really around, small business development, affordable housing, all of those things, which are important. And the banks and of course the venture capitalists, I see a lot of opportunity coming down the pipe, because you've got other banks, Bank of the West just announced, and some others here, that there's going to be a huge influx of opportunity, and nobody wants to sit on cash. They want to move it out as a loan, as an asset. So there's going to be opportunity, but I think what I'm hearing from everybody is we have to be educated, we have to be knowledgeable, and then moving from there, we've got to work and have a relationship with our bankers or other, I would call them subject matter experts, to make sure that when we walk in, we are walking in strong, and we are working with everybody to get the loans approved. If I misstated, I apologize, but that's what I'm hearing so far. Now, and I do have some questions that did come up. Can I ask those questions of the panelists here real quickly? One was from Deanna. Deanna says, do you know of any grants or matching funds opportunities? And then Dr. Vic Baker, personal friend and dear friend, asked, year over year, are institutions looking for percentage growth in profit or revenue dollars? And should we be working on increasing revenue or driving down costs in order to meet requirements when it comes to lending? I think that's a very good question on both of those. If we could attach both of those, I would really appreciate it.
Yes, for the doctor, really good question. And it sounds like you understand your financials. In short, both, but yes, we're looking at the net profit. That's what we're looking for. So in order to have a high net profit, you got to have a high gross profit. So once again, with the write-offs, it can't hurt you. Some of the write-offs can be added back, depreciation, interest, any one-time type of fees, like maybe there was some lawyer fees or something like that. Those can be added back, but anything other than that, it counts against you. So those are considered soft losses, not hard losses, so that's what we look at. I'm gonna go a little off topic, just a little bit. I wanted to go back to our conversation earlier about education. During the pandemic, the PPP was out, and that was a huge thing. From my experience, everyone have different experiences. From my experiences, some of the larger banks were helping their larger customers. And a lot of the small businesses, including African-American minority businesses, were not getting PPP, and it definitely looked like it was discrimination. And I'm not saying it wasn't, it probably could have been in some cases. But some of the smaller banks were working hand to hand with all of their business clients, helping them fill out those applications. In the cases where people were declined, from my experience, it was because the application wasn't filled out properly. If you have a relationship with your relationship manager, banker, whoever, they could overlook that. They can't fill it out for you, that's illegal, but they can tell you, this is what's missing, this is how it's going to get approved. So going back to the whole relationship thing. And then another one that's still going on right now that a lot of people still don't know about is ERTC, which is Employee Retention Tax Credit. That's something you can still work with your CPA or your payroll company and get cash back. If you were in business during the pandemic, 2020, and then the first 3 quarters of 2021, for each employee that you employ, you can get up to $7,500 per quarter that they were employed. That's something that was not advertised like PPP. PPP literally during that time was being advertised by the administration by the minute, where the banks was getting the information at the same time as the public. And ERTC is something you haven't heard at all, unless you know someone that's giving you insight. So I would say if you guys were in business in 2020, talk to someone about ERTC. There's a lot of money on the board. I've seen people give back $300,000 for free. And it may take some adjusting with your tax returns, but either your CPA or your payroll provider can help you with that. But it's free money out there. And it's something that most people don't know about. You don't even know to ask about it unless someone like myself has that insight, has that information to let you know. So I would say look into that. That's a huge thing that's still going on. And to my understanding, there's not much of a limit. I haven't heard that they're going to stop it at this date or they're going to stop it at this amount. So I would get on it as soon as possible, just because all that can change. But as of now, it's still out there and it's available.
Thanks, Kris. That was incredible. Thank you very
Kris,
much.
can you put that in the link, maybe in the chat or something, a link?
Yeah.
Yeah, sure will.
Thank you, sir. Keith and Will?
Yeah, I would just add a couple of things. First and foremost, in terms of Dr. Baker's question, from an equity perspective, profit is king, clearly, but we also want to see growth, right? So, unlike a bank that, is really like hyper-focused on the bottom line, if you're showing really strong growth from an equity perspective, that's really interesting to us, right? And if we can work together to see how you're going to ultimately get to be more profitable over time, that's going to be attractive. So I just wanted to kind of lay that out. Clearly, they're both very important, but growth is critical from our perspective, from an equity point of view. And then the other question came up about grants. I would just encourage everyone to kind of Google, big companies that are doing grants for people of color, right? So there are a couple that I'm aware of, like Comcast, Verizon, Ernst & Young, Airbnb, Lisk, that are doing that. And there's new ones that come out every day, right? And I think there's certain chambers. I know that the Oakland Chamber, African American Chamber of Commerce, has done grants in partnership with different banks and stuff. So I think that's something to absolutely be very mindful of and apply as much as you can for those types of opportunities as well.
Thank you, Keith. Will, do you have anything to add?
Yeah, I just want to say from a grant perspective, CDFIs are a great way to actually tap in to find out what monies are on the table and what's available to you. But then I also want to go back to something Kris brought up, and he was talking about resources. I think a lot of the times we don't know, well, especially us as African Americans, we don't know what resources are available to us. We have no idea. When you think about from a housing market perspective, I mean, there's so many down payment assistance programs that we just don't know. And I think us that sits in these seats, we have an opportunity and a responsibility to direct traffic and make known the resources, what are available, your rights as a consumer, understanding everything what's available to you, because I think we fall short because we have no clue what's available to us. We get one prescribed prescription and that's it, right? Not realizing there's so much out there for us. We just need to make it known what's available to us.
Yeah, I was just reading a comment, and you're right. There is some discrepancy, and Kris, don't get upset. Will, don't get upset with me because we're bankers. But I was told many years ago that bankers are dumb, and what that means is don't understand my business. That's an acronym that we use because we're looking out the rear view mirror and last 2 years of the tax return and wanting to get that where your business is growing and you're driving the car and you're looking out the front. So people like Keith, they're looking at revenue and percentage of growth and opportunity. And we're like, hey, what'd you do last year and the year before? And we're using that as a baseline on future opportunities when it comes to lending, and we look at the fair and equity standpoint. So I think, to Dr. Baker's point, when he just made this mention in the chat, I think a lot of people are looking for red flags when it comes to underwriting. We're looking for we're looking for those kind of things. We have to mitigate those. And if you're able to do that, it's really about funding and the right things. And I think, Kris, you made a very good point about, African Americans, we sometimes don't see those opportunities. That sometimes is when we looked at the PPP and they were giving to large companies, is because those large companies had relationships with their bankers. And those are the ones who got in the front door while you're standing outside waiting to get into the branch on the COVID and you're sitting out the hot sun. And then when you get in, you're thinking that, oh, I'm in, I'm writing this thing. And you don't know that you're in the last 10% because they did all the other applications the night before because they had relationships with their clients. So you have to build on those relationships that it's going to allow you. And I think Keith, Kris, you made a very good point about that, the building of those relationships. I wanted to talk and I know we're kind of running on time, but here's one. What are your top 3 things that you would like to see from Black businesses as we start looking at, access to capital? I mean, mine were always, hey, I really would like you to understand and really get everything together because I don't want a piecemeal at the middle. I don't want any surprises. Don't get me down the process and tell me you had bankruptcy 3 weeks ago. Things like that would always kill me. And let's just try and mitigate that because I think one of the things that I think even Will said was, even if we can't approve it, there are partners out there. There are CDFIs. I mean, I know US Bank has a fantastic, and Bank of America and a lot of others have a fantastic CDC. They have their own CDC where they go out and loan money to venture capitalists, CDFIs and other groups. There's an alliance of African-American led CDFIs in this country. I think US Bank gave them $30 million to go out and loan money to African-American businesses. So what are your top 3 things that you would like to see? What tips that you may want to suggest to the group here as we go forward and try and capitalize on 2023 and beyond? I'm going to start with Keith.
So I think one thing that I've seen recently and that I love to see is increased collaboration between folks in the same industry. So if you have a business in, let's say, bottling, are there other bottling companies that you can partner with, do something together, right? So in our space in venture capital, we've seen venture capital firms collaborate to look at deals, collaborate to try to raise money together. we've got programs where we're training venture capitalists to access institutional capital. So to the extent we as a people can leverage our own capital and resources by working together, I think that's something that is in our own power that we can control and that type of thing. So I think that's one thing that I would encourage people to think outside the box around. I think the second thing is scale, right? Is just thinking, there's a lot of programs out there. There's this Inflation Reduction Act around climate, and there's a lot of federal dollars coming down the pike to help companies like ours. And so to the extent we can think in a larger scale and scope, sometimes it's easier to get 10 million as opposed to 100,000, right? So I would encourage people to be thinking along those lines. And then the last thing is, I know we haven't chatted about this on this panel, but there are a lot of folks who are aging out, right? Who are looking, and these are majority-owned businesses, right? And so I'm an M&A expert, so I like to think about, is there a way to acquire a business that has the size and scale that could get me, a loan from a bank or whatever. And so I would like for us to kind of think along those lines as well in terms of how to kind of grow, not only organically, but by acquisition as well.
Keith, that is such an interesting topic that you just brought up about acquisition, especially in majority-owned firms selling to minority-owned firms, because I've heard, and please ask, and you're the expert, I've heard that my majority-owned firms some are looking to sell to minority-owned firms. And then those firms could capture opportunities with its supplier diversity and things like that. Have you seen any networks, any opportunities for, maybe it's something that the chamber could put on around those kind of opportunities that you've seen around a forum or a workshop? I'd love to hear your perspective.
Well, that's what we do, right? So we have a network of hundreds of venture capital, private equity, growth equity firms that are either looking to grow their businesses organically or acquire other businesses. So we'd love to work with the chamber to say, look, let us pull together a panel of 3 to 5 of these private equity firms, and that's all they do. They're looking for deals, and I'll highlight one that I think is interesting. It's called Apis and Heritage. Apis and Heritage, African-American led private equity firm that's focused on employee ownership. So they're looking for companies that have significant employees that are Black and brown that they can buy out and help them grow. The employees have the ownership. If you're a seller, there are tax benefits to selling to an ESOP, an employee stock ownership plan. And so that's one example. And then there's other firms out there that focus on utilities, food, other things that are looking for a platform, a bigger company, and then kind of add on acquisitions on top of that. So yes, we'd love to, talk about that as a way to help grow our businesses.
Thank you so much. Kris or Will, I'll let you go, whoever wants to jump in. Top three.
I'll go ahead. I would say this. I think what I would like to see, and this is more or less from my perspective, we need to really socialize what it is we're doing, right? Articulate the need for these programs, but then also how it fits in the overall, how entrepreneurship closes the racial wealth gap, right? I think that's the key, but then also really start by being really visible and available and educating these business owners on what they stand to offer while expanding their awareness and what they stand to achieve, and not just a partnership with US Bank, but financial institutions as a whole. The trust isn't there. And I think if we establish the trust and them understanding we're not here to push products and services, right? We're here to establish trust. We're here to provide the roadmap to their end game. But ultimately just creating an environment where they can be vulnerable enough to tell us what their needs are. And then at that point, we can enact a plan that helps them become financially secure and successful.
Right. Thank you for that. Appreciate that, Will. Kris?
Absolutely, Frank.
Yeah, you're exactly right, Will. I would say in general, and for sure it happens with African Americans, but it's in general, a lot of business owners, they'll come in and tell us half the story. So you tell us half the story, we give you half a solution. We got to know everything. And a lot of times they'll come to us with half the story. We give them half a solution. It doesn't work out. They're upset, never hear from them again. But we have to know the full story. Like I said before, tell us what you want to do, what your thoughts are before it happens as much as you can. That way we can help you. We can put you on some sort of plan if you're not there at the moment. And yes, there are additional resources that the bank can point you to, once again, if you're open to it. A lot of times people aren't open to it and they think we're putting them off just because we're not lending to them directly. Not everyone is bankable. And bankable means you don't have the financials, you don't have the revenue in order for a bank to lend. Banks are very conservative. Everyone goes to banks because they're most familiar with banks, but we're very conservative. I think it was Keith earlier, you got to have some skin in the game. When we're looking to lend, we're lifting the hood on the engine. We're asking for everything. And so a lot of times, once again, those applications are half filled out, not filled out. Why do you need to know that? I don't feel comfortable. Well, if you don't feel comfortable, then why would we feel comfortable lending?
Right.
And so, every bank is going to ask for a personal financial statement. And that personal financial statement is everything. It's what your net worth is, what your retirement is, what your stock holding, do you own a home, so on and so forth. What we don't tell you is we want to make sure your net worth is at least what you're asking for. If you have a $2,500 net worth and you're asking for 50,000, it's going to be hard for us to lend to you. So keep that in mind. Another thing I wanted to add to Keith, you talked about acquisition. I just want to talk about succession planning. That's something that all business owners should have. And a lot of people in our community forget to do it. Let's say we're talking about successful minority business owner. He's working hard. He's been successful. He assumes his kids want to take it over. Well, this new generation, as we know, they're different. And they may not want to do the hard work that you did or your father did or whoever. And your kids don't take it over, or if they do take it over, they have no idea how to run it. Now the business just went into the dirt and the business is worth nothing. So banks can actually help you with succession planning. There's multiple departments within banking, one of them being wealth management. And the wealth management group helps you preserve those funds, help you preserve that legacy that you worked hard to create. The last thing banks want to do is see you lose your money. We don't want to see that. We want you to preserve it. We want to help you manage it. I would say create a trust. If you own a home, create a trust. You need to have a living trust that protects you. That's a way of preserving your wealth. So it's just these little key factors that you may not know or may not even trust. You might have heard it, may not understand it enough to move forward with it. But in my advice, I would advise that you should move forward with something like that, and maybe just, once again, have that relationship with your banker, with your wealth management advisor, and get more information on it, because it's going to help preserve your money, help preserve your business. And acquisition is something that banks can help you with as well. So those are some really good points. And then one more thing I wrote down that we didn't mention: you need to have a relationship with your CPA. If you're doing your own taxes, that's fine. I'm not saying anything is wrong with that, but unless you're a CPA, you're not going to know the ins and outs of the tax laws, and you're not going to know what to look for to help you with your business. And part of what CPAs do is you let them know that they see all your finances. And some of the questions they ask is, what are you looking to do? So if you tell them, I'm looking to acquire something, I'm looking for a loan in the future, they will adjust your taxes or make your taxes in a way to where you are bankable. And they might even have some contacts with banks. Banks work directly with CPAs. They are a great source of I can't even think right now, of referrals to the bank. And so a lot of CPAs are connected with banks and they know the different banks that they work with and say, in your situation, bank ABC will probably be a better fit for you. You may not bank with them, but here's a contact. They can talk to you in more detail, but for sure have a relationship with the CPA because they can help you get over that hump as well.
Thanks, Kris. And I don't want to leave anybody with no doom and gloom. I mean, it's not all bad in banking. I've been in it for so many years. I love it. But and I've been with Union for 26 years. This is probably, next year will probably be the most exciting time that I've ever seen for Black business owners in my 26 years. And I see that because of things that banks are thinking about doing now. And I start talking to people about, what major banks are looking at. And I mentioned earlier what is a special purpose credit program, but I didn't define it. And I wanted to go back and define it if I may. So under what is called the Equal Credit Opportunity Act, which was done in the 1970s, that is a law that basically was sometimes nicknamed the woman's law because you could legally discriminate against a woman. If she was in childbearing years, you could say, yep, we're not going to give you the loan. You may get pregnant and you wouldn't be able to get a loan. You have perfect credit, your business is growing, but they could deny you. So in the 70s, they came up with something called the Equal Credit Opportunity Act and extended that to people of color, because if you think they were doing stuff bad for women, imagine African Americans. So, but there was a provision within that law that called for what is called a special purpose credit program, where you could look at what they call a disadvantaged class of persons. And that would be maybe, let's just say, we're just going to take African Americans, for example. And you could do a more favorable underwriting criteria just for African Americans or just for people of color. And so let's just say minorities. And then you could have that, and your credit underwriting, you could have a separate credit underwriting just for them if they self-certify. We've been doing this at Union since 1993. US Bank is going to adopt it. So they're going to have that on board. Chase is going to come out with theirs next year. Wells Fargo is going to come out with theirs. Bank of America, you're starting to see them already doing some things what they're doing on the lending side for residential lending. When you heard about the Black home buyer program that they have is zero money down, but they're going to do that on the business side too. There is a gamut of different banks that are doing that. And I'm hearing CDFIs are trying to get that done and try to create more programs that's intentional around helping people of color get the financing they need. And it's called access to capital. It's not really around, them, getting lower interest rates. It's increasing the flexibility of the loan, of the credit criteria to allow more people of color to get approved for loans. And I have not heard, we've been like the only ones talking for years, but now every bank is incredible, and it's getting a lot of support from the controller of the currency and pushing this out. And so now you're going to see more and more banks do it. A bank in Texas just launched theirs about 4 months ago, and is having tremendous success with their program. So you're going to see more and more of that probably in next year. So I just wanted to let you know that I think when it comes to access to capital, I think we should take this time to think about getting our finances in order, getting everything documented. Don't come to me with a shoebox, but come to us and be ready, because I think what you're going to see is not only just the banks. You're going to see, Keith's group jumping in. You're going to see, CDFIs. You're going to see CDCs. You're going to see a lot of different folks start to deploy capital. And I just wanted to let you know about that. And I did want to add, there was a question around grants and loans. You're also seeing cities start looking at it, and municipalities start looking at grants. So say, for instance, you have a storefront, and there's in certain communities, there are grants out there that will actually give you the money to improve your storefront. And that's free, that a lot of people don't know about. And so a lot of cities are wanting to do these, especially in communities of color, what some people refer to as CRA areas, which is Community Reinvestment Act areas. So you're seeing a lot of deployment of that. So please, I think it's encouraging for all of us to take a look at the opportunities that whether within their city, within their municipality, their county, because I would hate for you to pay for a storefront, fix it up when you know you could have got it for free. Paid, because I think free is the best four-letter word I've ever heard. So when somebody says free, I'm jumping up and down. So let's move on to a couple of other things that that we want to talk about, because we only got about 10 more minutes. And what I'm interested to know from all of you is not only where you see where we are going, but some positive steps that you're seeing from clients that you're dealing with within your peers around, what are some growth opportunities for organizations? Keith, you mentioned a great one about, hey, you may have an easier time getting 10 million than 100,000. I mean, that's mind blowing to me. So how are we looking at, and what do you see the market going? So our folks could take advantage of those markets and opportunities. So Will, if there's anything or what you're seeing out there on the marketplace, because you are in the trenches as anybody on this panel, you're probably in the trenches the most. What are you seeing out there that causes you reasons to get excited about 2023? Is Will still with us?
No, we don't have to.
Oh, wait a minute. He had a hard stop. I just read the message. Forgive me. Hey, Kris, I'll move over to you.
Okay. So what are we seeing for as 2023?
Yeah. Is there really signs of encouragement that you're looking at, some positivity things that you're seeing? I think there's a deployment of capital out there. I think there's an influx of cash, and looking forward to that. And I think more and more institutions and I would think CDFIs are being real creative in the way in which their credit underwriting to even deploy more capital out there. Is there anything that you're seeing or you're hearing about in the marketplace that causes you to go, yeah, this is going to be a really good year and we need to capitalize on it?
To be very honest, I don't know the answer to that question right now, just because things are changing so quickly.
Yep.
And yeah, I like to be truthful and not exaggerate, but from what I am seeing, what I am hearing, there's going to be a big change probably in the summer of 2023. This is when everyone is expecting everything to kind of stabilize and switch over. But once again, that's just a prediction right now. 2 months from now, it might be different. But if things are continuing as they are today, that's the timeline. If things get worse, then it's just going to get pushed down. If things get better, then it could happen sooner. But the outlook is mid-year 2023. And
so, Kris, let me follow up on that.
Mm-hmm.
If you're saying that, what causes you to reason to stay up late at night and gives you less sleep? Because Iris had a good question about inflation and lots of credit, the interest rates, and the higher interest rates and things like that. What's causing you to just have causing you reason to pause?
My true answer is if the Feds don't time this perfectly. With the Feds raising the rates, what they're doing is they're slowing down the economy, which they need to because there's inflation. But no one has a crystal ball to know how much is enough. And whenever they raise rates, you don't see an immediate impact. It takes about at least 3 months, 3 to 6 months for us to really see the impact that the rates have caused. And the Feds meet every 6 weeks to determine if the rates are going to go up or down. So with them meeting every 6 weeks and you don't see a change for 6 months, they could get it wrong. And if they do, that could make us slip into a recession, which for sure will keep me up at night and keep everyone at night. But I mean, things are constantly changing. And I would say banks have adapted greatly since COVID. The way we do business is totally different. And we're still looking on what the proper solution is, just because the world is constantly evolving. But I mean, the upside is things will get better. It's just right now we don't have that crystal ball to really know. And if I could take like 1 minute to talk about additional resources that everyone should know about. If you're looking to buy commercial property, look into something called opportunity zones. Huge, 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 which is another thing that most people don't know about. The last administration had passed it, but it gives you huge tax benefits for buying in distressed areas. Something called business improvement districts.
Yep.
Wherever you have your business in your city, there's something, if you go to the city's website, there's something called business improvement district. Sign up for it. They will tell you about all the things that's happening in your area that would affect your business. They will tell you about all the grants and special loans that the city, that the state, that the federal government will help you with. And then also go on to the local city website and look up the economic development departments. That's another resource, and they will keep you in the loop of different what's coming on the horizon, different grants, different special loans. So those are resources most people don't know about, but I would say write those down and look into those in your local areas, just because they will keep you in the know as well.
Thanks, Kris. Keith?
Yeah, I put something in the chat, which is kind of the National Minority Supplier Diversity Council. I would encourage companies to check this out, become registered as a Black-owned business, so you can do more business with big companies as well as with the federal government. I think it's and they've got a tremendous amount of resources that could be helpful as well. So that's what I would say. I think in terms of anything that kind of keeps me up at night, it's just the overall economy, what's happening on a global basis. I just had a conversation with someone about China, what's happening there in terms of, coronavirus and, supply chain disruptions and that kind of thing. That gives me reason for pause. And so, but it also creates opportunities for folks who can build and resource here in the States as opposed to abroad. So those are the points that I would make.
All right, thank you both. Appreciate both of your time. If anybody has any other questions, I'm looking at the chat right now. Just want to make sure I didn't miss anything. But I don't want to have anybody be really extremely pessimistic out there. I know interest rates are rising. There's an old saying, in the housing market, you marry the home, you date the rate. And basically, you're trying to get to the next level. If that's the home you want, get the home and you can afford it. But in time, you change the rate, and you refinance and do the things that you need to do. You date that, but you marry that home. And you want to make sure that, because in time you will grow. That's a great asset. And we've always talking about creating creating wealth for our communities. And I think that's an extremely important avenue. Small business is the other leg that we talk about. The third is, of course, investments that we do. Any parting words, from you gentlemen? You've got each 30 seconds, and I'm gonna hold you to it. So, Keith, anything that you would like to say for the last 30 seconds?
I would just like to say it's been great to be part of this panel. Feel free to reach out to me. I put my LinkedIn details in the chat. I look forward to doing additional panels with the Chamber, particularly around private equity and growth and, acquiring other businesses, right? Because I think there's huge opportunities there.
Yeah, and Keith, we're going to hook you up not only with the Chamber, also with Cecil Plummer at the National Minority Supplier Development Council. Him and I had conversations just on that topic alone. So thank you very much. Kris.
Yes, it's been an absolute pleasure as well. I do appreciate the opportunity to speak with everyone and try to help you out and be resourceful. Another thing I failed to mention, if you go to the FDIC website, they do have financial literacy courses on all levels, from kindergarten all the way to seniors to small business owners. And it gives you a really good breakdown of the underwriting process and how banks look at things. So if you're looking for additional resources, I believe it's in a PowerPoint. Just go to the FDIC website.
Thank you. Thank you both. Thank you all. I really appreciate your time. We'll turn it back over to Deanna and the chamber.